Hello, folks. Welcome back to another session. Today, I will explain what is correlation, how much correlation is there between different pairs, and how much correlation is in different commodities. So, basically, today our topic is correlation between currencies and commodities. There are two types of correlation: positive correlation and negative correlation. Positive correlation means if a pair is having positive correlation with other pair and other currency, it means if one pair goes up, the other pair will follow its direction. And negative correlation means if one pair goes up, the other pair will go down. So let me show you different currencies with positive correlations and negative correlation. I will also show you the examples on different charts. So stay tuned and watch the video till the end. We will start from Euro USD and USD CHF. Euro USD has completely negative correlation with USD CHF. When one pair goes up, the second pair goes down. Let me show you the chart of Euro USD and USD CHF, and I will further explain why there is negative correlation between these two pairs. So here we can see the Euro USD was in a downtrend and the market came below. Now let me show you, it is an hourly chart example. The time frame is 1 hour. So we can see the market is making lower highs and lower lows. It means the trend is down. Now let me show you the USD CHF chart. Here the time frame is also 1 hour and the trend is bullish. The market is making higher highs and higher lows. So basically, if you buy Euro USD and sell USD CHF, you will not make any profit, as one will be in profit and the other pair will be in loss, because they have the complete negative correlation with each other, and the trade will result in a type of hedge trade. So now let's get back to the title page again to explain it better to you. As I have explained in my previous videos, the first currency in a currency pair is base currency. The second one is code currency. So in Euro USD, Euro is a base currency and US CHF is a code currency in the pair USD CHF. So it means if we buy Euro USD, so we are buying Euro and selling USD at the same time. And here at the USD CHF example, if you are selling USD CHF, it means we are selling only United States dollar and we are buying CHF. And as both Euro and CHF are European currencies, so they are interrelated with each other. So that is the reason United States dollar in one pair is code currency and in another pair it is base currency. So it is not important to know the logic behind the negative correlation moves. Just know why the pair moves in different direction and it will be suffice and enough to know that they are having negative correlation with each other. This is Euro USD and GBP USD. So here both of these pairs are having positive correlation with each other. If one pair is moving upward, the other pair will be also moving upward. And if one pair is moving down, the other pair will follow its direction. The reason we are having positive correlation in these two pairs, as both Euro and GBP are European currencies and they are interrelated with each other. They support each other, and United States dollar in both of these pair is in code currency. Let me show you the examples of Euro USD and GBP USD positive correlation. So you can see this is the recent chart and recent prices of the euro USD pair. The market is in a downtrend, and we can see clearly from this point, from the high to the low. This was the move in euro USD. Now let me show you the move in GBP USD. So see, both moves are quite similar to each other. This is GBP USD pair, and in both pairs I have opened 1 hour time frame. They are having almost complete positive correlation with each other. So when one pair goes up, the other pair also goes up. It means buying both at the same time means just doubling the lot size. If you buy one pair and if you sell the other, one trade will be in profit, the other trade will be in loss. Now let's move toward the other pairs, which are AUD/USD, NZD/USD with Euro/USD. First of all, I will say that Australian dollar and New Zealand dollar are having very positive correlation with each other. When the pair AUD/USD moves up, the New Zealand dollar and United States dollar pair will also follow its direction. And both of these pair are having positive correlation with Euro USD. The correlation is almost 75% positive with United States dollar, sorry, with Euro USD. One of the reason they are having positive correlation is that United States dollar is in code currency in all of these three pairs. This is the most recent chart of Australian dollar and United States dollar, and the move will look quite similar to the move of Euro USD. So we can assume they are having extremely positive correlation with each other. When one pair goes up, the other pair will follow. If not completely and 100%, it will follow at least 70-75% of the direction. Now let's move toward United States dollar and Canadian dollar, which is USD CAD and Euro USD. So these pairs are having negative correlation with each other. One of the reason is that in one pair United States dollar is base currency, and in the other pair United States dollar is code currency in Euro USD. So that is the reason they are having negative correlation with each other. Is again, this is the recent chart of Euro USD. The move is down. Now let me show you the United States dollar and CAD move, which we can see the most recent chart. The move is up and the trend is in uptrend. Here we are having Euro USD and USD JPY. You must be asking why I am comparing all the pairs to Euro USD, because Euro USD is the pair that is most traded in forex. So they are the first example where there is no correlation. There is zero correlation between Euro USD and USD JPY. They don't follow each other's direction, nor they go against each other. They will move according to their own patterns and according to their own fundamental data. So that is the reason I will not take you to the charts to show you its examples, because they are having completely zero correlation with each other. Okay, now I will explain commodity, gold. Gold is a commodity, and United States dollar. Gold is a anti-dollar. Anti-dollar mean when the United States dollar moves in upward direction, gold direction. And when gold move upward, the United States dollar will move downward. So gold is anti-dollar, and during the time of unrest, investors tend to dump dollar in favor of gold. Gold is also considered as universal currency, and it is a safe haven. So whenever there is conditions that are not in favor of United States dollars, the investors withdrew their funds and they invested in gold. So that is the reason gold is anti-dollar. Now let me discuss the correlation between gold, AUD USD and NZD USD. So the gold correlation with these two pair is extremely positive. Behind this positive correlation is that Australia is third and New Zealand is 25th largest gold producer in the world. So these currency are also called as commodity backed currency. So whenever the gold goes up, these pair will follow the direction of gold, and whenever the gold goes down, these will follow the direction of. During the year there will be times when they will be moving incongruity. They will be not following the direction of each other, and that is totally fine. It happens, and it completely depends on the fundamental data and the conditions what is happening in the world. Now let's come toward gold and USD CHF. As I have already said in the previous topic that gold is anti-dollar, and the pair USD CHF, we can see United States dollar is a base currency. So it means when USD CHF pair will move up, gold will move down. The other example behind the negative correlation between gold and USD CHF is that 25% of Swiss reserves are backed by gold. As gold goes up, pair goes down. From the pair I mean USD CHF. So it means when USD CHF goes down, so here it means that CHF is going upward and only United States dollar is going downward. So that's the reason gold is having completely negative correlation with USD CHF and only positive correlation with CHF. So here the only reason behind their negative correlation is United States dollar being a base currency in the pair USD CHF. Now it is gold and USD CAD. Again, the United States dollar is in base currency, so it means the correlation will be negative between these pairs too. And another reason, which is the major reason, is that Canada is the fifth largest producer of gold. So as I said, the CAD is here in gold currency. So it means gold is having positive correlation with CAD. But as United States dollar is a base currency, so it is the only reason they are having negative correlation. The negative correlation is not 100%, but still we can see it was the gold move from that high to this lower point, and currently it is moving downward. Now let me show you USD CAD. We can see it is the chart of United States dollar and CAD pair which is moving upward. So now you can see the correlation which is negative between gold and USD CAD. So it is oil and USD CAD. As Canada is one of the top oil producers in the world and it exports around 2 million barrels a day to US to the United States. As oil prices move up, the pair move down. United States dollar and the CAD pair moves down. Because of the reason we are having USD here in the base currency as a base currency in the pair. That is the only reason this pair is having negative correlation with oil. So when oil goes up, USD CAD goes down. It means USD is sold and CAD is bought. The negative correlation is almost 80% between them. Now let's move toward gold and Euro USD. So here the correlation between the commodity gold and the Euro USD will be positive correlation because of the reason that gold and euro are both anti-dollar. When dollar moves up, these two will move downward. So that is the reason they are having positive correlation, which I will show you on the charts. This is the example of the chart of Euro USD, which is moving downward. Now let me show you gold example, which is also moving downward. There will be sometimes they will not be following each other's direction, but that will be only because of the fundamental data and the conditions, the wars that are happening in the world. The correlation between gold and Euro USD is almost 80-85%. Now let's move toward bond yields and local currencies. So an economy that offers higher returns on its bond attract more investments. This makes its local currency more attractive. So what the investors and the people of a country do when they buy bonds from the state and from the banks, actually they are giving loan to their own government with a promise from the government that the government will pay higher interest to the bond buyers. That is the reason most investors and most people buy bonds. So, if foreign investors have to buy bonds, they will have to convert their currencies to local currencies. So, bond yields and local currencies are having extremely positive correlation with one another, with each other, and when one goes up, the other will follow its direction. So it is one of the most important topics because most traders are making the mistake of buying one pair and selling another pair, while both of these pair will be having positive correlation with one another. So it is extremely important to know the correlations between pairs. And if a person wants to take a buy trade in Euro USD, he can also confirm it in USD CHF by looking at the opposite direction. And he might see that there is any sell trade appearing in USD CHF. Similarly, if a person is buying GBP USD and selling Euro USD, so it will be having of no good. So it was all for today, and see you in another video with another topic and another strategy. Take care.